Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about USDJPY. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing on the JPY and how they're moving their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality free trading education. So without further ado, let's jump straight onto the charts. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is approaching a quite significant level of monthly demand and support. In fact, from here, all this previous rejection to the downside was created. The market then broke above that zone. The previous resistance was turned support. The market tested it here as support and respected it as support. And at the moment, the market is approaching the exact same level. So there is the possibility to see a bit more bearish continuation, but overall, to see a rejection to the upside once again away from this quite strong monthly demand and support area. Now, if we drop down on the weekly time frame, what do we see? From a weekly standpoint, if we look at the pattern that the market has been creating, first of all, if you look closely, you will notice that this candle here is actually a red candle. So in creating this move to the downside, the market is actually creating a weekly M pattern, because starting from here, we have up, down, up, and now we're getting the creation of an M pattern. Now, generally speaking, after the creation of an M pattern, what you would expect is a potential push higher for the market to complete the M pattern at the neckline, so essentially the previous support turn resistance. So also here on the weekly, what we could expect is a bit more bearish continuation, but overall to see a rejection to the upside away from that support and demand that we have just identified from a monthly standpoint. Dropping down on the daily time frame, what do we see? Now, here on the daily, first of all, we can notice how we had a massive impulse to the downside. Now, generally speaking, when you have an impulse, you do expect the market to provide a correction. And the first target to the upside in the case of a correction is the 0.32 of the Fibonacci taken on the impulse leg. Now, in this case, the impulse leg is from this high to this low. So essentially the 0.32 of the Fibonacci taken on this impulse leg would be the first upside target in the case of our rejection to the upside away from the support that we have just identified by looking at the monthly and weekly timeframes. So here on the daily time frame, it seems like there is a very good probability to get a potential push higher. Now, what we need to check is if institutions are shorting the JPY, because if institutions are shorting the JPY, they are actually longing USDJPY, because every currency on the spot is traded against the USD. So if we can see that institutions are actually shorting the JPY, so longing USDJPY, this would increase the probabilities of a potential push higher for the market to create this correction to the 0.32 of the Fibonacci taken on the impulse leg that we have just identified being our first upside target. Now, if we go and see what we have when it comes to the commitment of traders, so what hedge funds and the big players in the market are doing, and we check the data precisely for the JPY, we can see how in the long run we went from having minus 55.5k net positions, so a situation in which institutions were positioned to the bullish side for the JPY. This is one of the highest net positioning that we had in quite some time, all the way down to now having minus 118k net positions. So essentially, net positioning got cut in half to the bearish side, meaning that institutions have shifted their positioning back to the bearish side for the JPY, increasing their shorts from 90.7k to 173k. Now, At the same time, longs are also getting decreased. Now, this is quite bearish for the JPY, meaning that institutions are actually longing USDJPY because every currency on the spot is traded against the USD. So in order for them to short the JPY, they have to long USDJPY. So this increases the probabilities that we could have this potential rejection higher to this 0.32 of the Fibonacci taken on this impulse leg. So in a situation like this, what would I expect? Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see this potential push higher, completing this impulse to the downside with a correction to this 0.32 of the Fibonacci taken on the daily impulse leg. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked both in description and on the main page of my YouTube channel. Here, you have the possibility to gain access to the most complete, all-inclusive mentorship program that I have created for you. As soon as you open the website, you will see this video breaking down everything included in the mentorship program. And in the program, you have the possibility to gain access to all my courses and also to the software, so the COT data software, which is exactly the one that we used in this analysis, the trading station software with Telegram signals integration, which puts together everything that you need as a trader all in one interface. You also have the possibility to gain access to one-on-one private mentoring directly with me, so you will have my personal contact. And if you continue to scroll down on the website, you will see that directly from the website, you will have the possibility to register and gain automatically access with the email and password that you will create during the registration process. So at least I suggest that you go and check it out right now. The link is both in description and in the main page of my YouTube channel, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, if you have any suggestions on any topics or pairs that you would like me to cover in the next videos, make sure to drop them in the comments below, and I will see you in my next video.